As far as health insurance products of any insurance company are concerned, almost every company is designing two kinds of policies: benefit based and indemnity based. Indemnity based is a product which is from times immemorial, since the beginning it is, and the most popular policy is known as the Mediclaim policy. In any indemnity based product, the claim, if payable, is reimbursed on the basis of the supporting documents or bills and vouchers. There is a provision of policy deductibles. Lot of things are excluded from the claims. Say for example, tonics, supporting accessories, traveling expenses, etc. But the other benefit-based policy is absolutely different to the indemnity-based policy. Here the concept is nothing will be deducted. On the contrary, the policy will pay the claim of the sum insured limit selected by the insured for himself or his family, provided the claim is payable. This claim will be paid one time as lump sum amount, and after payment of the claim, insurance company has nothing to do with the manner the insured is incurring this expense. Here the typical thing is, maybe the insured has incurred very less amount than the sum insured. Say for example, the sum insured is 5 lakh. Insured has spent only 3.5 lakh on the disease. But if he has complied with all the policy conditions and the claim is payable under the policy, the complete 5 lakh amount will be paid as the selected sum insured by the insured, while the actual expenditure is 3.5 lakh only. So this is not a reimbursed based policy. Reimbursed based policy is indemnity policy. In benefit based policy, the benefit limit selected by the insured is always payable if the claim is permissible in the policy. This is a very important aspect. And a combined effect of these two policies are, none of the policy is giving minus effect on each other. Means if you are having both the policies, benefit based as well as indemnity based, you are entitled to claim under both the policies for the same kind of sickness, and both the insurance companies, may be similar or different, will pay the claim as per the policy provisions. So one disease can be considered under two different policies, and both the policies will be paid, and there will be no violation of the principle of indemnity, because the policy, nature of the policy is different. Say for example, the person has spent 3.5 lakh on the bypass surgery. He has taken a Health Suraksha policy. So when the Health Suraksha policy is paying the claim may be paid for 3 lakh or 3 lakh 10,000 or 3 lakh 40,000 after policy deductibles. But for the same disease, the benefit based policy will pay the minimum sum insured or the maximum sum insured, whatever sum insured is selected by the insured. If sum insured is 7.5 lakh or 10 lakh or 5 lakh, the complete sum insured will be paid. Whatever amount is incurred on the treatment, it has nothing to do with it. So there is no counter effect, no contra effect of one another policy. Insured is a gainer that way. Because in most of the cases where the indemnity based policies are there, like Mediclaims, people are not getting their claim completely. lot of deductions are made. So this is an alternate to this option. Then why not take another policy in addition to top up of the sum insured? Even if you are going for the top up of the sum insured in a medical policy, still the policy deductibles will be there. Maybe the limit is still left out, but policy deductibles are subject to the clauses. Say for example, any tonic, any vitamins recommended by the doctor is not payable. In that policy, they are not treated as the part of treatment. The doctor is asking for the gloves or betadines or band-aid. Insurer is purchasing at his own cost, but the policy will not pay for that. Insurer's relatives, family members, wife, children are attending to him day and night. Nothing is paid for them. Insurer is recommended very healthy and hygienic diets. He is buying at his own cost. That is not reimbursable. So a lot of reductions are there in a indemnity-based policies. So this alternate to the indemnity-based policy is the benefit-based policy. We are having all benefit-based policies earlier, but this is the first policy which is launched and based on the indemnity-based concept. So under this policy, cashless treatment facility is there. Up to 50 years there is no medical checkup. As usual, tax saving is there as per the provisions of the Income Tax Act, because the health insurance policies and life insurance policies are exempted from the premium amount, is exempted from the income tax. Financial stability is there, better medical care is there, supported medical emergency is there, and health insurance, the purpose of health insurance is there. Let's see what is the coverage, because coverage of the policy is important. Now all these things are covered under the policy. This is very interesting. All these things are covered in the policy. What does it mean? Policy will pay for inpatient hospitalization, pre-hospitalization expenses, post-hospitalization expenses, daycare treatment, moderate treatment, Irish treatment, cataract treatment, as well as ambulance expenses. If you look at this slide, you will feel policy is very good. All these things are paid. All these things are covered. So the policy is competitive, beneficial, because these are the normal requirements which all are covered under the policy. But they all have their limitations. What limitation is there? Say suppose hospitalization. Now hospitalization is covered. Expenses related to the hospitalization will be paid under the policy. But there is a limitation. What limitation is there? Room rent, boarding, nursing expenses are payable only up to the 2% of sum insured, subject to maximum rupees 5,000 per day. In big cities like Mumbai, Kolkata, Chennai, in the renowned and branded hospitals, a room may cost 10,000 rupees per day, 15,000 rupees per day. It depends upon the nature of the hospital, what kind of capacity is there. If you are admitting in a Leelavati kind of hospital, room rent would be very high. So here is the limitation up to 2% of the sum insured, subject to maximum of rupees 5,000 per day. Secondly, intensive care unit charges, ICU charges. Normally, ICU requirement is always there. And what the methodology hospitals are taking today, the moment person going to the hospital, he is admitted to the ICU first of all. And ICU cost more than the normal room charges. Intensive cardiac care unit, again, that's the costly affair. And then the limitation up to 5% of the sum insured, subject to maximum of 10,000 per day. But there is no limitation for surgeon, anesthetist, medical practitioner, consultant, specialist fee. That is as per actuals. Anesthesia, blood, oxygen, operation theatre charges, surgical appliances, medicines and drug cost, wards, diagnostic imaging, modalities as per actuals. Cataract treatment. Here is the limitation. 25% of the sum insured or 40,000. Not only ours, all companies are having the restriction on cataract treatment. 40,000 rupees is a good amount. Whichever is lower, per eye under one policy year. If a normally cataract operation takes 25, 30,000, 40,000 like that. Dental treatment due to injury, up to some insured. Plastic surgery treatment due to injury, up to some insured. All daycare treatment, up to some insured. Road ambulance, 2,000 rupees per hospitalization, and modern treatment, up to 50% of policy sum insured. But there is a precondition for hospitalization. The condition says the maximum 24 consecutive hours as inpatient. Means if the person is admitted in the hospital for more than 25 hours, then only it's counted as 1 day. But this condition is not applicable for the daycare treatments. There are certain diseases which are treated and operated during the daycare only. For that 24 hours clause is not applicable. Even the doctors is making the patient free within 2 hours, 3 years. That is permissible. So hospitalization or daycare treatment is not required for 24 hours. Now comes the Ayush treatment. Ayush is not the name of any person. This Ayush means AYUSH stands for Ayurveda, Yoga and Naturopathy, Unani, Siddha and Homeopathy. These are all pathies of treatment in addition to the allopathy. Since people have their trust and belief in other pathies also like Ayurveda, Homeopathy, Naturopathy, etc. So they are taking treatment and they are avoiding allopathy. In such cases, if they have the insurance policy, this is the duty of the insurer to indemnify or compel or to pay the claim of different pathies also. So now all these pathies are covered. The same condition of minimum 24-hour hospitalization is required only as inpatient. The insured may take the treatment under Ayurveda or Naturopathy or Unani or Siddha or Homeopathy or are covered. Pre-hospitalization expenses. This is one good benefit given to the insured by the health policies. Because normally before hospitalization, insured or any person starting the treatment with the consultation of the doctors. So in every case, doctor do not recommend for hospitalization. In some cases, within 2-3 days, the person is cured. But due to any complication, if hospitalization is required, then only the doctor will recommend. So maybe sometimes 5 days, 10 days, 20 days, even 30 days, the treatment continues. Thereafter, the hospitalization is recommended. So pre-hospitalization expenses mean any medical expenses incurred prior to admission in hospital is known as the pre-hospitalization expenses. And up to 30 days it is payable. This pre-hospitalization includes lab test, X-rays, CT scan, ECG, MRI, doctor consultation and medicines. So this is payable. Then comes the post-hospitalization. Even if the pre-hospitalization was there, then hospitalization was there, still the doctor has recommended the treatment to continue for 1 month, 2 months, maybe 3 months. So those expenses are also required to be covered under the policy. And these are known as the post-hospitalization. Any medical expenses after discharge from the hospital is known as post-hospitalization expenses. They are also covered under the policy up to the 60 days from the date of discharge from the hospital. And they also include consultation fee, diagnostic charges, medicines, drugs and physiotherapy, etc. Now cumulative bonus. This is a good concept in favor of the insured. Cumulative bonus. What does it mean? A reward offered on renewal by insured to policyholders who do not make any claim during a policy year. Means on any claim-free year, insured is entitled for 5% bonus, cumulative bonus, if there is no claim, and that will increase every year. This is different to the no claim bonus on motor policies. The no claim bonus is given on the discount as a discount in the premium. Here this is not the case. Here cumulative bonus is given as the increase in sum insured by 5% every year, and this can go up to 50%. And thereafter again, if there is any claim on the policy, the entire cumulative bonus will not become zero. Only 5% will be deducted out of the earned bonus only. So this is a good feature. A cumulative bonus shall be available only if the policy is renewed, premiums paid within the grace period. Means there should not be any break. Let's understand it with an example. Say for example, this is a policy. Sum insured is 5 lakh. First year there was no claim. Policy was renewed with 5% cumulative bonus. Sum insured became 5 lakh plus 25,000. Second year also there was no claim. Policy renewed for 5 lakh plus 50,000. Third year also no claim. Policy renewed for 5 lakh plus 75,000. Fourth year also no claim. Policy renewed for 5 lakh plus 1 lakh, 6 lakh rupees sum insured. Fifth year there is a claim. In that case, bonus will not be given, malus will apply. Means 5% claim amount will be deducted. 5% amount on the cumulative bonus will be deducted. So the cumulative bonus earned is 1 lakh rupees. 5% is deducted, that is 25,000. Sum insured will remain 5 lakh 75,000. Interesting example. Now eligibility criteria of the policy. The policy is given to any person of 18 years and up. Risk can be covered of the child of 3 months, 3 years, 13 years. But the policy contract would be with a person who is 18 years and above, maybe father, mother, or whoever it is. In policy, the proposer's age limit has to be more than 18 years. Policy can be taken for self, spouse, dependent children. The definition of dependent children is interesting. Okay, natural or legally adopted children are covered from 3 months to 25 years. But if the child above 18 years is financially independent, if the son is, say, 24 years, he is not doing anything, he can be covered. But if son is only 19 years, but he has got an employment, he is earning, he is self-dependent, he cannot be included in the policy. He will take a separate policy for himself. Parents and parents-in-law. Parents-in-law are also covered. So who can buy the policy? Any person who is more than 18 years of age. Policy is available in 2 formats, individual basis and floater basis. Individual basis means separate sum insured for each member. Floater means single sum insured for all members. Single sum insured, maybe 5 lakh, 7.5 lakh, 10 lakh. All family members can be included. Sum insured, 3 options are there, 5 lakh, 7.5 and 10 lakh. Only 3 options are there. If the policy is required for 6 lakhs or 9 lakh, it cannot be. Either of these 3 have to be chosen. Proposal entry is minimum 18, maximum 65. Policy is available for 1 year only. On the expiry of the 1 year, policy can be renewed for further 1 year. Now there are certain features which are interesting to know. Say for example, what is the hospital? Here the hospital means the hospital must have minimum 10 inpatient bed if the population is less than 10 lakh. And if it is more than 10 lakh, then 15 inpatient beds. This is the requirement as per the Clinical Establishment Registration and Regulation Act 2010. This is the law of India. So this is applicable to all Indian hospitals. If the bed are less than that, that will be treated as the clinic and not hospital. Similarly for Ayush, because Ayush is not that famous as compared to the allopathy. So here the minimum requirement of inpatient beds are only 5. But 5 has to be there, 5 or more than 5. Then free look period. Free look period means if the insured is not satisfied with the policy terms and conditions, he can get the premium back, less administration fee only. The policy can be cancelled. Premium will be refunded. This free look period is available in all health insurance policies of all the general insurance companies in India. Then grace period. Grace period means extra 30 days within which the policy can be renewed. If it is renewed within that grace period, no benefit will be seized. Insured will get all the benefits in continuity. There are certain benefits which require continuation, renewal and continuation. Like pre-existing diseases and initial waiting period. So if it is renewed within 30 days, it's okay. Benefits will continue. Then initial waiting period. Here initial waiting period means for first 30 days there will be no liability on insurance company. Claim will not be payable. Insured has to wait for first 30 days. But this is not applicable in case of accident. In case of accident, even second day, third day, fourth day, any day, claim can be filed. This is also not applicable on renewal of the policy. At that time again, no waiting period will apply. Then pre-existing disease period. Pre-existing disease means no company is covering the pre-existing diseases because this is an exclusion of all the health insurance policies. For the simple reason, insurance company covers the uncertain days. Pre-existing disease has already happened. It is not uncertain. This has already taken place. So if the loss has already taken place, if the sickness is already there is no uncertainty involved. So for such cases, 36 months is the pre-existing disease period which is excluded from the policy. Thereafter the continuity. In continuity the rest will be covered. Co-payment means a cost sharing requirement under a health insurance policy in which insured will bear a specified percentage of claim amount. And in your policy this is only 5%. Each and every claim under the policy shall be subject to a co-payment of 5%. Co-payment means insured will bear this cost. But this co-payment does not reduce the sum insured. Sum insured will remain the same. This is applicable for claim amount only. 5% claim amount will be borne by the insured itself. Now list of modern treatments. There are 12 kind of modern treatments. medical treatment or surgical procedure required less than 24-hour hospitalization due to technological advancement. Nowadays, various methodologies are taking place. Say, for example, deep brain stimulations are there, oral chemotherapy is there, robotic surgery is there, botanical chemotherapy is there, IONM is there, intraoperative neuroimmunity. They doesn't require longer time. They are done within hours, 1 hour, 2 or 3 hours. In such cases, 24 hours hospitalization is not required. There is not a compulsory clause for these 12 specific diseases. And waiting period 24 months. We have specified 20 specific diseases which are excluded from the policy for first 24 months. What does it mean? Pre-existing disease we are not covering in first 36 months, means 3 years. 20 diseases we are not covering for 24 months, means for 2 years. These 20 includes the common diseases like hernia, like piles, like hyperostomy, tonsillitis, like cataract operation. So cataract claim is not payable for first 2 years. Thereafter only it will be covered. So these 20 diseases are excluded for first 24 months. Then there are certain general exclusions. All the general insurance companies are excluding certain risks from their policies. And these risks are common almost. War, nuclear war, maternity expenses, birth control, hazardous or adventurous sports, breach of law, change of general treatment, obesity. So common 19 general exclusions are there. Now claim process. Under the policy, the claim will be paid by 2 different methodologies. First one is cashless. Cashless means what? Insurer to pay nothing. Insurance company, if liable to pay the claim, will pay the claim directly to the hospital. Insured would bear only the policy deductibles. But in this process, TPA will handle the claim on behalf of company. He can initiate cashless in 24 hours from the date of emergency hospitalization. And cashless request to be sent 48 hours before admission in case of planned hospitalization. This is the most simple and most required methodology. Because normally there are diseases which are requiring the higher amount for treatment, say 5 lakh, 7 lakh, 8 lakh. It is not possible for everyone to have such a big amount in whole. So at times, treatment is urgent. If you are not paying the money, hospital will not admit you. But if you have the insurance policy and the cashless facility is there, then TPA will help you. TPA means third party administrator. This is an intermediary channel approved and licensed by the IRDA. They are the bridge between the insurance company and the insurer. They are settling the claim, they are making the tie-up with the hospital chains, and they are extending the claim settlement facilities. Second method is reimbursement, as usual. Here the only thing is documentation part is bigger. You have to submit lot of documents for everything. Original bills, invoices, and other things. Because this is a policy which is indemnity based. So here the reimbursement will be there. Reimbursement is there in the cashless method also. But reimbursement direct to the hospital. Here the reimbursement to the insured. So documentation part is bigger. TPA will assist. And you need certain documents for claim procedure. If you are taking the claim through reimbursement method, you have to submit duly completed claim form, photo and identity proof, NEFT details, KYC details, original doctor's prescription, final bills, original payment receipts, and discharge receipt from the hospital. All these documents are required to settle the claim. So, reimbursement system starts after the discharge from the hospital, while the cashless system starts from the day one, and the treatment is obtained and the direct payment is given to the hospital. Now see the premiums. We have got 4 tables, 4 different tables. 3 sum insured options are there: 5 lakh, 7.5 lakh, and 10 lakh. Health insurance premium is always calculated on the age basis of the insured. The insured could be minor, it could be major. Policy starts covering the risk from 3 months. Maybe on renewal the person may be of 75 years or 80 years. Still the claim is there. So age bands are there, and accordingly the premium is decided. But in this first table, premium is calculated without GST and without value pack. These are 2 different terminologies. It means this is only basic premium. It doesn't include GST, it doesn't include value pack. Second table includes GST, but it does not include value pack. You can take an example so that you can understand the amount. Say suppose a person of 40 years have taken the policy of 10 lakh rupees. He has paid 9,676 rupees premium without GST, without value pack. If he is paying the GST over it, how much the premium will be? 10,884. If he is taking the value pack, he had to pay 10,608. But here the GST is not included. Means additionally GST has to be applied. So in this 4th table, premium with GST and with value pack is given. Means the person of 40 years who is taking the policy, he has to pay 12,570 rupees for this policy of 10 lakh rupees. So this 4th table is the complete one. Now, what is this value pack? Why one will take the value pack? And now the instruction is given to all the branches that policy has to be given with value pack only. So this is an add-on cover. This is a loading. There is a loading of 15% on the premium. This loading of 15% means enhancement of the coverage. Insured will get better benefits. Not one, many. Say for example, 1. Policy has room rent limit for boarding and nursing expenses, 2% of the sum insured, subject to maximum 5,000 rupees. So that limit is revised now. If the value pack is taken, that 5,000 rupees will become 10,000 rupees per day. Value is increased. Second, there is a limit on the intensive care unit and ICC unit. That is 5% of the claim amount and 10,000. The value pack is taken, which is compulsory now. A limit will be 5% of the sum insured and maximum 20,000 rupees per day. Third, 5% co-payment is there. Means insured has to bear the 5% claim amount. But in case of value pack, insured has to pay nothing. 100% claim will be paid by the insurance company. And fourth, there is a limit of pre-hospitalization expenses and post-hospitalization expenses of 30 and 60 days. In case of value pack, the limit is increased to 60 and 90 days. So 15% loading of the premium will give you greater benefits as compared to the premium. Now for individual policy, 100% premium is payable for all members. But for family floater, the 100% premium for highest age is there, and for rest of all 45% of individual premium there. This is a big benefit, but you must have to understand how to calculate this. So this example will explain you. Say suppose I am taking a policy for my family floater policy. I have opted sum insured of 10 lakh rupees, and my family, my wife, my daughter, my son is there. All four are covered. So the premium applicable to me at the age of 45 would be 9676 without GST. That 100% would be applicable. But premium for my wife would be 9224 at the age of 40. I have to pay only 45% of it. It will become 415. Premium for son is 7415 at the age of 24. I have to pay only 45% of it. That is 3337. And for daughter of 18, 6874. Here I have to pay 309. That means against 33189, I have to pay 2257. If I am taking the value pack, there again there is a discount. Same, 45%. So that 4978 will become 3039. The total, I have to pay 23,296 against 38,167. So that is a major saving, the premium. Then only I will apply the GST. There is one more example of the 5 lakh rupees sum insured. Same provision. In this self, in case of self, 100% premium. In case of other family members or dependents, 45% premium only. On value pack also 45% premium only. And the total would be much lesser than the actual amount paid. Now there are certain other discounts. Direct discount 20%, family discount 10%, online discount 5%, group employee discount 5%. Or if insured says that in cumulative bonus, I don't want increase in sum insured, I want the cash discount to the premium. That is also paid. The only difference is if you are taking for cumulative bonus, the increase will be 5% per year. If you want cash discount from the premium, the discount will be 2% for first 5 years. And thereafter only 1% for next 5 years. So this is your choice. This is not mandatory. If you want cash discount, go for 2% for first 5 years. If you want increase in the sum insured on claim-free policy, 5% every. Now there is a tie-up with third-party administrator who will provide the cashless services and claim services, you can see. This is one of the famous TPA of India that is known as Medi Assist Insurance TPA. It is having 13,000 plus hospital tie-ups, e-card from app, claim intuition from app, claim tracking from app, and connect on WhatsApp. Connectivity link is there. This is good because its footprints are remarkable. 14,000 plus provider partnerships are there. 6 million claims received annually. 226 million plus total lives served so far. 81 offices pan India they are having. 32 insurance partners are having. Means they are working for 32 insurance companies. This is the connectivity link for WhatsApp. So whatever you want to download, this is available on their website. Download e-card, intimate claim, pan hospitalization, the list of network hospitalizations, claim form, everything is available on the website. So this is all about the health insurance. This policy, which is indemnity based. Now if you have any doubts, you can ask. Any questions? Yeah. Yes. A little louder, please. Okay. Okay. Hmm. Hmm.